And welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 3rd, 2026, and we're diving into Grainger's fourth quarter and full year 2025 earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Grainger, a leading distributor in North America and Japan, has just released their earnings report, and there's a lot to unpack, especially given the challenging macro environment they faced in 2025.
Revenue and profitability overview. Let's start with the top line. Grainger reported a net revenue of $4.4 billion for the fourth quarter of 2025, which is a 4.5% increase compared to last year. However, the operating margin decreased by 70 basis points to 14.3%. John, can you shed some light on this?
Absolutely. While the sales growth is commendable, the decrease in operating margin is primarily due to increased expenses, including unforeseen healthcare costs and slower sales growth in their high-touch solutions segment. Despite these challenges, Grainger managed to maintain a solid revenue growth trajectory.
And what about the earnings per share?
The diluted EPS for the quarter was $9.44, which is slightly above the analyst's forecast of $9.43. However, it's a 2.8% decline from the previous year, mainly due to an unfavorable tax rate, which was only partially offset by fewer shares outstanding.
Segment performance and strategic initiatives. Grainger operates through two main segments: high-touch solutions and endless assortment. How did these segments perform in the fourth quarter?
The high-touch solutions segment saw a modest sales growth of 2.2%, driven by continued growth in the US and Canada. On the other hand, the endless assortment segment experienced a robust growth of 14.3%, thanks to strong performances at Monotaro and Zoro. This segment's growth highlights Grainger's strategic focus on expanding their product offerings and enhancing customer experience.
It seems like their strategic initiatives are paying off. What are your thoughts on their future outlook?
Grainger has shown resilience in a challenging environment, and their focus on customer experience and strategic growth initiatives positions them well for future success. Their 2026 outlook includes a promising sales growth forecast of 6.5% to 9.0% on a daily organic constant currency basis.
Financial health and shareholder returns. Let's talk about Grainger's financial health. They generated $2.0 billion in operating cash flow for the full year 2025. How did they utilize this cash?
Grainger returned $1.5 billion to shareholders through dividends and share repurchases, demonstrating their commitment to delivering value to shareholders. This is a significant return, reflecting their strong cash flow generation capabilities.
And looking ahead, what does their 2026 guidance tell us?
For 2026, Grainger is projecting an EPS range of $42.25 to $44.75, indicating confidence in their ability to drive profitability despite ongoing challenges. Their guidance suggests a focus on maintaining strong operational performance and shareholder returns.
Key takeaways. In summary, Grainger has navigated a challenging year with resilience, achieving a 4.5% sales growth for 2025 and an adjusted EPS of $39.48, up 1.3%. Their strategic focus and strong cash flow have positioned them well for 2026, with a promising sales growth guidance of 6.5% to 9.0%.
Indeed, Grainger's performance reflects their ability to adapt and thrive in a dynamic market. Their commitment to customer experience and strategic growth initiatives bodes well for future success.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Grainger's performance in the comments below.